Most people think Bill Gates is still the tech visionary building a better world. They're wrong. Right now, he's doing something that reveals the exact opposite. He's not investing in the future anymore. He's getting out of it. Fast. In just 18 months, Gates has sold off over $100 billion in holdings. Not gradually, not strategically spread out, all at once. The speed matters. The scale matters. But here's what really matters. The asset classes he's dumping. They're not random. They're the ones connected to everything he's publicly championed for 20 years. Think about that for a second. The man who built his entire foundation around optimistic investing is suddenly acting like someone preparing for impact. SEC filings show it. Bank statements confirm it. The pattern is undeniable. And you're still holding what he's abandoning. This isn't about Gates being smart. It's about Gates knowing something. Something big enough to make $100 billion worth of decisions in record time. What is he running from? Before we get into the what, you need to understand the who. Bill Gates doesn't move money without reason. He never has. Every decision he's made, from Microsoft to the foundation, has been calculated years in advance. So when something changes this drastically, it's not random. It's reactive. The Gates Foundation manages billions in global investments. For decades, it maintained stable portfolios aligned with public missions. But starting in 2024, the pattern shifted. Liquidation accelerated. Assets moved at speeds that caught financial analysts' attention. This isn't speculation. It's documented in investment tracking reports and financial filings that anyone can access. Here's where it gets strange. Gates personally began diversifying away from traditional markets in ways that contradicted his own public messaging. While he continued advocating for global markets and emerging economies, his personal portfolio moved in the opposite direction. Bonds were reduced. Tech exposure decreased. Emerging market positions were cut. It's a classic disconnect between what's said publicly and what's done privately. The two narratives don't match anymore. The real twist came when the diversification pattern became undeniable. Alternative assets started receiving significant attention. Commodities, physical holdings, things with tangible value, things that historically hold worth during economic instability. Financial tracking services flagged these shifts immediately. It wasn't hidden, it was just quiet. Most people never notice. But people who follow money for a living, they noticed everything. When billionaires whisper, markets scream, that's not an investment strategy based on optimism. That's positioning based on something else entirely, something darker, something he's not talking about. Then came the public statements. Gates began using language about systemic fragility, about market vulnerabilities, about preparing institutions for unexpected scenarios. These weren't his usual optimistic talking points about saving lives and changing the world. These were warnings wrapped in corporate language. Media outlets reported on these shifts. Investment forums discussed the implications. The messaging had fundamentally changed direction. Within weeks, a pattern emerged among other institutional investors and ultra-high net worth individuals. Similar moves, similar timing, similar reasoning. When billionaires move together like this, markets pay attention. Financial advisors start getting uncomfortable questions from wealthy clients. Investment strategies get reconsidered overnight. The smart money always moves first. And it moves quietly. But here's what nobody's talking about yet. This coordinated shift happened right as global economic indicators started flashing warning signs. Supply chain vulnerabilities resurfaced. Debt levels reached historic highs. Currency stability questions emerged across multiple regions. Interest rates hit unexpected peaks. It all aligned too perfectly to be coincidence. Financial journalists started connecting dots. Independent analysts built timelines. The story wasn't hard to see once you looked at actual movements and statements. They were all documented, all traceable, all real, and most importantly, they were all happening simultaneously. The question that matters is simple. What information were these investors acting on? What signal did they see before everyone else did? And more terrifying, what happens when the rest of the world finally catches up? Now here's where most people stop looking. They see the moves, they see the pattern. Then they assume it's just smart investing, normal wealthy person behavior. But you need to go deeper, because the actual proof is sitting right in front of everyone, hidden in plain sight. Start with the timeline. In early 2024, Gates's asset sales were steady but manageable. Normal rebalancing, nothing alarming. But by mid-2024, the pace doubled, and then tripled. Financial reports showed consistent massive liquidations across specific sectors. Real estate holdings in developed nations decreased significantly. Stock portfolios in traditional indices were reduced. Bond allocations shifted dramatically. These aren't rumors. These are facts documented in quarterly reports and SEC filings. But here's the twist that changes everything. The assets Gates was moving into told a completely different story. While selling traditional investments, he was simultaneously acquiring positions in agricultural commodities, precious metals, and inflation-protected securities. And why would someone do that? What would make those investments suddenly more valuable than everything else? The answer is brutal and simple. If you believe the system is about to break, think about what holds value in a broken system. Land that produces food, physical assets you can actually touch, metals that have held worth for thousands of years. Currency alternatives. These aren't investments for growth, these are investments for survival. Gates wasn't alone either. Tracking data shows that other mega-wealthy individuals and institutions made eerily similar moves around the same time frame. George Soros, Ray Dalio, major pension funds, sovereign wealth funds from multiple countries. They were all moving in the same direction, all selling similar things, all buying similar alternatives. That's not coincidence. That's consensus among people who have access to information most of us don't. The deeper reveal comes from examining what these investors were saying privately versus publicly. In earnings calls and investor meetings, they used cautious language about uncertainty and volatility. But in private conversations with financial advisors and in their actual portfolio decisions, they were acting terrified. They were hedging. They were preparing. They were getting their money out. Then came the economic data. Throughout late 2024, inflation remained sticky. Debt to GDP ratios hit levels not seen in decades. Banking sector stress indicators started climbing. Currency fluctuations became more volatile. Credit spreads widened. These weren't small blips. These were system-level warnings, the kind that institutional investors can't ignore. Financial analysts who track these patterns started publishing reports. Academic economists began writing papers about systemic risk. News outlets covered the story in fragments, never quite connecting all the pieces into one terrifying picture. But the pieces were there. The proof was there. The cliffhanger is this. If the richest people on Earth are preparing for something catastrophic and you're not, what does that mean for you? What are they preparing for exactly? This is where it gets real. This is where theory becomes threat. Because the moves Gates and others are making aren't just financial strategy anymore. They're survival preparation. And what they're preparing for has massive consequences for everyone else. Start with the obvious danger. If ultra-wealthy investors are moving money out of traditional markets, those markets lose liquidity. Less money flowing in means prices fall, stocks drop, bonds weaken, real estate values decline. Regular people's retirement accounts, savings, investments, they all get hit first and hardest. You don't need Gates to crash the market. You just need enough smart money to quietly exit at the same time. But that's just the beginning. The deeper danger is what happens to currencies. When institutional investors lose faith in a system, they stop holding that currency. They convert to alternatives, precious metals, other currencies, tangible assets. This creates pressure on the dollar, the euro, whatever currency you hold your wealth in. Inflation accelerates. Your purchasing power evaporates. The money in your bank account buys less and less. What costs $10 today costs $20 in 6 months. Here's the twist that most people miss completely. Governments can't stop this. Central banks can raise interest rates, but that crushes the economy and triggers recession. They can lower rates, but that accelerates inflation. They're trapped. And when governments are trapped, they make desperate decisions. Currency controls, capital restrictions, forced conversions. These aren't theoretical anymore. Multiple countries have implemented versions of these policies when currencies collapsed. People suddenly couldn't access their own money. Bank accounts were frozen, assets were seized or restructured. It sounds impossible until it happens to you. The consequences spread further. When currency systems destabilize, supply chains break down. Imports become expensive, goods become scarce, stores run low on products, prices spike on essentials, food. This creates social pressure. People get desperate. Crime increases. Governments respond with restrictions. That's the cycle, and it feeds itself. Financial institutions that relied on stability collapse. Pension funds lose value. Insurance companies become insolvent. Suddenly, the safety nets people depend on disappear. Retirement accounts vanish. Insurance policies become worthless. People lose their savings overnight. But here's what makes this truly dangerous. Gates and billionaires like him, they won't be affected. They own physical assets. They own land. They own food production. They own alternative currencies and precious metals. They prepared. They positioned themselves above the system. Regular people didn't. Regular people held stocks, bonds. Regular people believed the system was stable. Regular people trusted. The real peak danger isn't economic collapse itself. It's that collapse creates two classes overnight. The prepared wealthy, the unprepared everyone else. And when resources become scarce, history shows us exactly what happens next. What's terrifying is this. Gates knows what's coming, and he's already on the other side of it. You need to understand something fundamental. This isn't about Bill Gates anymore, it's about you. It's about what you do with this information right now, in this moment, before the door closes. The evidence is overwhelming. The pattern is clear. Ultra-wealthy investors are positioning themselves for a major shift. They're not doing this out of paranoia. They're doing this because they see something coming. Something big enough to justify moving hundreds of billions of dollars. Something big enough to risk their public image. something big enough to fundamentally restructure their entire financial position. And they're not wrong. The economic indicators support their fears. Debt levels are unsustainable, currency systems are under pressure, inflation remains sticky despite rate hikes, banking sector stress is rising, supply chains are fragile, geopolitical tensions are escalating. These aren't small problems, these are system-level warnings. But here's the critical twist. You still have time, not much. The window between now and when everything shifts is narrowing. Gates moved when he saw the warning signs. Other institutional investors moved. But most regular people, they're still sleeping. They're still trusting that everything will be fine. They're still holding the same assets they've always held. The consequences of inaction are brutal. If you do nothing, you'll watch your savings erode. You'll watch your purchasing power disappear. You'll watch institutions you trusted collapse. You'll join the unprepared masses scrambling to survive while the wealthy retreat into their protected positions. That's not fear-mongering. That's pattern recognition based on historical precedent. So what do you actually do? First, educate yourself. Really understand how currency systems work. Understand inflation. Understand asset allocation. Read about past financial crises. Learn from history. Don't just watch videos. Research. Think critically. Second, diversify your holdings. Don't keep everything in one place. Don't keep everything in currency. Don't keep everything in stocks. Spread your risk across different asset classes, physical assets, commodities, alternative investments. The specific mix depends on your situation, but the principle is universal. Never put all your eggs in one basket when the basket is showing cracks. Third, build resilience in your life. Reduce debt. Build emergency savings. Develop practical skills. Create networks. Build community. These things matter more than you realize when systems become unstable. Money only works when the system works, but community, skills, and preparation work regardless. Fourth, pay attention. Don't ignore these signals. Don't assume it won't affect you. Don't trust that governments or institutions will protect you. History shows they won't. You have to protect yourself. The warning is simple. What billionaires do today, markets follow tomorrow. What the wealthy move away from crashes next week. Gates and others like him are already on the other side. They've already positioned themselves. They're already safe. The question is whether you will be. Don't wait for proof. Don't wait for permission. Don't wait for it to be obvious. By then, it's too late. Start today. Start now. Educate yourself. Diversify. Prepare. Build resilience. Because when the shift happens, and it will happen, you'll either be ready or you'll be scrambling. The choice is yours, but choose fast.